All right. Good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to our presentation of Boost Your Investing Profits and maybe even move up a tax bracket in 2018. Our presenter today is Sandy Chaikin, co-founder of Chaikin Analytics. Throughout this presentation, please submit your questions using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. Michelle Greenblatt and I will be available to respond to your questions. As a reminder, this webinar is being recorded and a copy will be sent to everyone who has registered. Now, a bit about Sandy. With no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that outperforms the S&P 500 and most money managers. Sandy is living proof that you do not have to be a financial expert to pick winning stocks. She presents webinars and speaks at industry events on fearless investing by following the Chaikin 5-step method. Sandy has also presented at Nasdaq and industry conferences on fearless investing. Prior to co-founding Chaikin Analytics, Sandy had her own marketing and communications firm in a career that spanned over 30 years. She's held senior management roles for Elizabeth Arden, L'Oreal, and the Franklin Mint. She is also a member of Elevate, a global professional women's network and Women in Investing Network of Philadelphia. So now to get us started, here's Sandy Chaikin.
Hey, Joe, thanks so much. And thank you all for attending today's presentation on how to boost your investing profits. And with a nod to tax day today, it's not a bad thing if you pay more in taxes next year because you're making more profits in the stock market. So that's what we're going to be focusing on today, not paying taxes, but how to make more profits in the stock market. Let me just read this brief disclaimer. Chaikin is not registered as a broker-dealer or investment advisor with the SEC or with any state securities regulatory authority. Chaikin is for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. Users bear sole responsibility for their own investment research and decision. Okay, so let's get started. But before we start, you might want to pull out a piece of paper and a pad or a tablet of some sort, because we're going to be talking about a number of stock ideas today, specific stocks that you may want to put on your watch list. So get ready to take some notes. All right, I always like to start the presentation with the problem. You know, what is going on in the marketplace right now? What's happening with investors? And individual investors have not performed as well as the industry average, which is the S&P 500. In that, as you can see by the research, the S&P has grown an average of almost 10% a year over the past 20 years, but individual investors have only averaged 2.5%. And the reason being, people buy on emotion, not fact. So that's really our biggest problem as individual investors. And the methodology that I'm going to be showing you today, 3 simple steps, will take the emotion out of the trade and allow you to trade and invest more profitably. So the challenge is how to find the winners. You know, how do you find those great winning stocks, stocks that go up double, triple digit performances year after year? And part and parcel with that is knowing when to buy that stock, and the key also is when to sell. That's the real secret sauce, is when to sell. So each of these steps we're going to be focusing on today: how to find the winners, how to know when to buy, and how to know when to sell. But my promise to you is that you're about to discover how to find these winning stocks and boost your profits so you can be confident versus fearful investors. And I really place a high emphasis on confidence, because if you're not confident in the decisions that you're making, you're not going to make good decisions, or you're not going to make any decision, and you're just going to freeze. So having confidence in your methodology is really critical to being a profitable and successful investor. So that's really what I want to instill in you today. And I think the methodology that I'm going to be showing you will give you that confidence. So the solution is to find winning stocks like this, Lamb Research. This is the stock I've bought, I've sold, I've rebought it. And as you can see by the really nice price increase here, this is a winning stock. These are the types of stocks you want to be in. We're going to break this chart down shortly, but just this is just a little teaser for what you're going to be in store for today to find. And the whole reason is to make more money in the stock market, right? Not to just so you can pay more taxes, but you want to celebrate. You know, you want to spend some of that money on doing things, you know, that are your passion, that you've worked hard for, as well as putting some money aside for retirement. So Mark and I do both. We set some of the money aside for retirement, which I make from my profits, but we also celebrate by planning trips. We like to take a nice trip or so a year. We don't have much time away from this business, but when we do have time, we like to take a nice vacation. So our vacations have been paid for by the profits that I've made. We've been to Turkey, to Vail, to Rome, just all in the last couple of years, and these are all on the backs of the profits that I've been able to realize. So why in this next hour should you be listening to me? Well, my portfolio has beaten the S&P every year since I started investing in stocks in 2012. And the S&P is our general benchmark. That's the benchmark against which most investors measure themselves, including myself. And the research shows that 4 out of 5 pros have underperformed the S&P 500 for the last 10 or 12 years. So by correlation, I've not only beaten the S&P, but I've beaten 4 out of 5 professional investors. And that's starting as a novice in 2012, where I invested in stocks that I pretty much had heard of, like eBay, Yahoo, Southwest Air, Skyworks. The profits alone on Southwest Air took us to paid for a more than 2-week vacation in Turkey a couple of years ago. So, I mean, that's how powerful these profits can propel you. Last year, no, we're already in 2017. So in 2015, I found some of these, really I call them hidden treasures, these stocks no one has ever heard of, American Woodmark and Activision. There were a number of stocks that I invested in the last couple of years, small cap stocks that had tremendous gains, as you can see here, including these triple digit winners that I found last year, Centa, Quad, Graphics, and NACO. These are probably stocks you've never heard of, but look at those nice percentages. I only hold 8 or 10 stocks at any given time. So this is how I'm able to manage my portfolio in 10 to 15 minutes a day. And I'll show you what I do. I set up 2 lists in our workstation. One called My Stocks. Those are obviously the stocks I own. And the other is my watch list. And these are stocks that I've heard about or researched and I'm not ready to buy right now, but put them on a list that I monitor. And those are basically the 2 lists that I monitor daily. So how did this all get started? You know, how did I start investing? Well, back when I worked for Elizabeth Arden, L'Oreal, and the Franklin Mint, I was able to invest in their 401k plans. And the choices then were mutual funds with Fidelity or Legg Mason. So I fortunately got into Fidelity's Magellan Fund, Peter Lynch's fund, which was and still is the most successful mutual fund ever. So that was a good choice. And also Bill Miller's Value Trust at Legg Mason did really well. So that was good. The funds grew, and I always put in the max. I would encourage those of you who have 401k plans at your business, put in the max. You won't miss it. It goes right out of your paycheck, and the company typically matches it. And it's a great way to start building your nest egg, and you'll be surprised at how that compounds. So that went along for a while, but as my career grew and I became busier and the fund grew, I didn't feel comfortable just having me manage it because I didn't feel confident that I knew enough about the stock market to be responsible for this kind of money. So at the suggestion of a good friend, I hired a wealth manager, and he immediately took the funds that I was in, sold them, and put me in 8 or 10 mutual funds of his choice, which Mark says is typically kind of industry standard. And that was okay. And that went along okay for a while until 2008. And of course, this needs no description of what happened in 2008. But what happened is that I kept calling him as early as September of 2008, the day that stock market dropped to 500, the Dow dropped 500 points in a day. I think it was around September 15th or so. And I called him saying, boy, everything looks like it's dropping. Do you think we should sell these mutual funds? And his advice, always, as I continued to call him throughout the months, was that no, it's all going to come back. It's better just hold on and stay the course. And, again, because I lack confidence, I said, okay, you're the professional. You must know what you're doing. And I watched my account go down. So this was a pretty trying time for me, watching my fund go down 40%, as I'm sure many of you did too. It was an incredibly stressful time. And I got to the point in March of 2009 where I just said, I can't do this. I can't do this anymore. I'm laughing, but I was really not laughing then. I was incredibly distressed. And I said, I can't do this anymore. I'm going to take the money out, sell what he's got, open a Vanguard account, and put it in an S&P 500 account, which is what I did. Mark and I were just getting together at that point, and he was saying, well, look, why don't you just close it out at the with the wealth manager and set up your own account at Vanguard. So that's what I did. And it's taken me, it took me a number of years to build it back. It's now more than 3 or probably 4 at this point times more what it was when I took it over in 2009. So all is good now, but that was really a turning point for me because it said to me, boy, you gotta watch this. This is your money. Nobody cares more about your money than you. And to turn it blindly over to somebody else, even though they are a professional, was not a wise decision. And this is one of the reasons why I'm on this webinar today with you, because I feel so strongly about the need for us all to be knowledgeable about our own investments. And before I got started with Chaikin Analytics in 2012, I was totally intimidated by the stock market. I thought it was far too complicated, way too sophisticated for me to ever understand or learn. And that, in fact, is not the case at all. And this whole 2008 meltdown really gave me the resolve to say, I've got to overcome this fear and learn how to do this. And I have. And it's not as hard as the pros make you think it is. Honestly, if I can do this, you can do this. And I started in my 60s, so many of you have many more years to tack on to use to make these profits. But we got to take control. It's our money. We own it. And even if you work with a wealth manager, and we have many people who do, and we have many wealth managers who are subscribers, that's great. But stay involved, and be part of the conversation so that when a stock or a ETF is mentioned to you or recommended to you, you can look it up yourself in Chaikin Analytics and see if you feel that's a wise decision to get in or out of. So let me pause here and just ask you all, what's holding you back now? What are some of the challenges that you're facing? What are some of the concerns with buying or selling a stock? Do you pause before you buy, or are there stocks in your portfolio that are losers that you're hesitant to sell? If you can just go into your chat box now, and put it into that Q&A box, that would be great. All right, I see Garrison here says timing. Yeah, when to buy and sell. That's always a big one, isn't it? And we're going to be getting to that. I see information overload. I see our president. Yes, that's. I'm afraid I can't do anything about that, but we can work around him. How to know when to sell, says Jack, and that's definitely a big one. Bill says when to buy and sell, and John, when to buy and sell and what to buy. Well, this is perfect because this is exactly what I'm going to be talking about today. Phil says when to act. Hank says whipsawed. Okay, well, we can tame that volatility, Hank, not a problem. Tom, what is the orange trend line on your charts? It's a, what is it, 100-day, Joe, 100-day moving average, I think it is. Trend line. And Dave says finding a good source of analysis information. Exactly. So who do you know? What do you know to trust? You know, what information can you trust? I think this is great. You guys have really spoken exactly as I hoped you would. And everything you've said here is already baked into this presentation. So get ready, because go. Okay, 3 steps. So we're going to focus just on these 3 steps, which is exactly the concerns you face. The tools you can trust, knowing what to buy, and knowing when to buy and when to sell. So those of you that addressed each one of the, I think each of the ones that I called out today, other than the president, I've got an answer to. Okay, so this is all to build confidence. And Bill here said after a webinar that he attended, Sandy affirmed that I know more than I think I do about how to use the tools. She's using them successfully with a similar novice background to mine, so I can too. So please keep this thought in mind, I can too, because this is exactly the thought that I want to leave you with tonight. It was a real confidence booster. All right, so why should you depend on Chaikin Analytics and the Chaikin tools? Well, we are quoted by and seen on all of the financial media, the major financial media, I should say, and we're used by hedge funds as well, including the Soros and Paulson. They use our stuff, as does Malden and Benziga and a number of other, industry resources. So let's start off with what tools to depend on. And the tools that we depend on really start with the Chaikin Power Gauge rating. This is a very simple, but not a simplistic rating on a stock's potential to out or underperform the market looking 3 to 6 months out. And this is the cornerstone of Chaikin Analytics and what I'm going to be talking about today. So I'm going to spend a minute on explaining what the power gauge is. And for those of you who's heard this before, just bear with me. Every time you look at it, you'll probably see something a little bit different. But the power gauge is really important. It looks very simple there on the surface, right? A simple gauge, red, green, yellow. But there's an awful lot going on underneath that meets the eye. But what it does is it cuts through the clutter. It solves the information overload problem of looking at all this data and trying to figure out some sense of it. So the data you see on the right is the data that the pros can look at. And this is part of their research on a stock. Mark created tools for the pros for some 40 years on Wall Street. And when this whole 2008-09 meltdown hit, he said he saw my distress, and he also saw the fact that not only I was pulling money out of my traditional brokerage firm, but literally billions. I think it was $400 billion came out of traditional brokerage firms into self-managed accounts like I set up at Vanguard. So he said, I'm gonna take the knowledge that I have, that I've learned from working with Wall Street pros and what they need when they evaluate a stock, and I'm going to build a system that's going to allow individual investors like you, Sandy, to be able to invest with the same information that the pros have, but in a format that you can understand. So individuals were always at a disadvantage because they didn't have the same tools and information that the pros had, but that's now Mark changed that. dynamic. So we now have the same information that the pros are using, but in a way we can understand by looking at this chart on the left of this very bullish rating on, this was Lamb Research. So the overall power gauge is always displayed. It's broken down into 4 basic components, as you can see here. And then each of those components are broken down further. So there's a total of 20 fundamental and technical factors. And as John Carter says, who's one of our partners, he calls this an awesome meter for stocks. And he says there's a lot of hyped up tools out there, but a single tool that combines 20 fundamental and technical factors to anticipate a stock's profit potential got my attention. It's the Power Gauge stock rating. At first glance, I thought this looked like an objective, awesome meter for stocks. And he likes it includes fundamental and technical analysis for stock selection and timing. So most tools are either give you a fundamental or a technical view, but combining both into one tool, the Chaikin Power Gauge rating, it really kind of gives you one-stop shopping. So the model is 85% fundamental, 15% technical, for those of you who want the breakdown. And here are the 20 factors that make up the power gauge rating in itself. These are the same 20 factors that the pros look at every day. Mark started with a universe of 200 factors, and he tested and tested and tested and got it down to these 20, which now have been in the marketplace since 2000 and I think it was 10 when we launched the first iPhone app with the power gauge rating. And they've been proven to work. We haven't changed a thing. We haven't changed a factor. We haven't changed the algorithm on how much each factor is weighted, because it works. It works probably 70% of the time. And as one pro said to me, boy, I'm only looking to be right 51% of the time. So if I can be right 70% of the time, I'm way ahead of the curve. So this really does give you an edge. And it's independent. It's not emotionally based at all. It's based on facts and data. So it does take the emotion out of a decision. But I highlight the 3 red factors because those are typically the factors that I pay closer attention to. Other than the overall rating, I tend not to drill down on all 20 factors, but you can and get a power gauge rating on each of those 20 factors. I don't do that. I depend on the overall rating and then those 3 red ones, except for earnings season, which we are now in. And you can see under earnings, I've highlighted earnings surprise and earnings consistency. And these really, for me, are significant factors to look at right now. More so than the red ones. So they really kind of override my other methodology when we're in earnings season, which we are now. And that's what I really drill down on now. But another reason why or how this takes the emotion out, it is so well put by this well-known analyst. Models beat humans. Models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. And that goes back to the first slide. For those of you that weren't on right at the very beginning, I showed a slide that showed the S&P has been up 10% a year on average over the last 20 years, whereas individual investors have only been up 2.5%. And that's because, as the research has shown, individuals rely on emotion. So it's hard to take our humanness out of being a human, but we can depend on these models and tools that are totally independent of emotion. And we need to depend on them when we're making financial decisions. And you'll find this takes a lot of the stress out of decision making as well. So another kind of feather in the cap of the power gauge rating, we partnered with Nasdaq and First Trust Portfolios to build portfolios that are based on the power gauge rating. And these have continued to outperform their benchmarks year after year. In the case of Nasdaq, it's been out there now 3 years, coming up on just got to our 3rd year anniversary. And in each year, the indexes that are powered by the Chaikin Power Gauge rating have outperformed. And same with First Trust, who saw those Nasdaq indexes and then came to us to create indexes for their money managers so that their clients, who are individuals, can invest in a portfolio of stocks based on the Chaikin Power Gauge rating. So we're getting more and more gravitas in the marketplace. And these very quickly are the performance numbers for the Nasdaq indexes. The returns for the ones ruled by the Chaikin Power Gauge rating are here in the middle, as against the benchmark, which is without the Power Gauge rating. So you can see there's a huge discrepancy. And the Power Gauge rating does allow outperformance. But here's something from a real person, just a couple of weeks ago. He says, through following your excellent system, my portfolio now stands in excess of $1 million. Before Chaikin, I would make money and then lose it. Consistent earnings were just not a reality for me. Chaikin has changed all that. I can't thank you enough for your tremendous service and excellent methodologies. And this is all just to give you the confidence that it's not just me saying that this system really works. It's real people making real money. All right, so let's move on to what to buy. But before I go, let me just ask you all just to let me know if you're on board with understanding the Power Gauge rating. It is such a critical part of what I'm going to be talking about, not only in this section, but the 3rd section as well, that I want to make sure I've got it covered. So if you don't mind just putting it into your Q&A if you're good to go. Okay, Jim, I see that. Thank you. And others good to go too. Okay, great. Then I will. Great. Awesome. Okay, here we go. Okay, what to buy. And this, by the way, is being recorded and will be sent to you tomorrow. So you'll have the full recording to reference. All right, there's basic formula for what we call a classic bull. This is what you want to buy, like Lam Research here in the sample. So you obviously want a Power Gauge rating that's bullish. You want the price to be trending up. Chaikin money flow needs to be strong. Relative performance needs to be strong, and you want it to be in a strong industry group. And so let's go over how we put that together. So let's look at Lam Research. Now this is a stock that I bought at this big yellow arrow right here back in February. And I bought it because all this wonderful green lined up. You can see starting at the bottom, the ribbon of the Chaikin Power Gauge rating for almost a year has been very, bullish or very bullish. So that's cool. The next line is this kind of heat map of relative strength versus the S&P 500. So what this does is it measures how strong this stock is performing against the S&P 500. Remember in the beginning I said I measure my performance, and most investors do, against the S&P 500. How am I doing against the S&P 500? Well, if a stock isn't outperforming the S&P 500, then why bother owning it? You don't want to own it. Or if it's just even with the S&P 500, you might as well just own the S&P 500 and count on that 10% increase a year, which isn't bad. But if you want to outperform and find those double and triple digit winners, then you're going to want to make your stock selection based on rules like this. And as you can see by this green heat map here, this stock has been outperforming the market since last June, almost a year. So that's cool. Overbought, oversold, I'm going to pass on that right now, and I'll explain that later. But let's talk about money flow. And that's this kind of mountainous range you see here of green and red. What this measures is the institutional money coming in and out of a stock. And this Mark created some 35 years ago, and it really made his name on Wall Street. And basically every technical trading package worldwide has Chaikin money flow on it. So it's a de facto standard when evaluating a stock. What's the Chaikin money flow? And why is this important? Well, if there's money coming in, as you see in these green spots, that means that the pros are buying the stock. And it took me a while to really kind of get a grasp on what drives a price. But because I was used to retail, I was used to the cosmetic business and the Franklin Mint, where the price is the price. It's not, it doesn't change moment to moment, day by day. And obviously it does in the stock market. A lot of what's driving that price is supply and demand. So if there's more people that want to buy a stock, it's going to be in higher demand, and thus that's going to bump the price up, because it's going to be there's going to be more people that want it than there are shares that are available. And likewise on the reverse, when investors are selling, like you see here in red, it tends to depress the stock, and the price stock tends to go down or go sideways. It's such a reliable indicator for me that I really value and watch it closely. And you can see here in like December, January this year, when everything else is green on this chart, but money flow is negative, that the price does tend to go sideways. And as soon as money flow kicks in, you can see what happens here. The price shoots up, right? And you can see the price now going up, up, up. So this yellow arrow here with this little triangle is a buy signal. For those of you who want to know when to buy, these triangles are really helpful. We have 6 pairs that trigger for different reasons. This one here is a money flow buy, as you can see up here in this top of the chart up here. I've overlaid money flow because that's triggered, and that's what gave me the alert to buy this stock back in February. So I bought it back here at like 117. This had been on my watch list. I told you I keep 2 lists. And I've been watching this and just waiting for the right time to get in. I got this alert, and so I bought the stock. And I'll explain this a little bit more in the sell section, but I sold it up here when it hits this upper volatility band. I figured this is a really good time to sell it and take my profit, which is exactly what I did. It had reached a 52-week high. These kind of dotted lines are what we call volatility bands, and they basically measure where a stock price is likely to, the range that a stock price is likely to stay within. So once it starts going outside of that upper band, I don't want to say you're on thin ice, because it's a good thing, but it also means that it's not likely to continue. So when a stock does hit that upper volatility band, that's often a really good time to take your profit and leave the party. And that's exactly what I did. But I did rebuy it yesterday because, as you can see here in this EPS column, they reported tonight. The little moon means after the close. They reported just after 4 o'clock tonight. And they have a history of outperforming. So I wanted to get in on this pullback here before they reported. This is also a 5-year view of Lam Research, which I find very helpful to do on a stock before I buy it, or as I'm considering it, because this is a pretty nice chart, right? This is 5 years of pretty solid growth. So some charts are like all over the place. They zigzag all over the place. So they're very inconsistent. But I like to invest in stocks like this that are pretty consistent. And by all these green EPSs, that means they beat estimates. And because we are in earnings season right now, that's significant, because if a stock beats the earning estimates, it tends to spike up the day after. Can be a really nice time to take a short profit. If it misses, it can spike down. That's not so good unless you're trading options. But this kind of history, gave me confidence back here to say, yesterday, to say, boy, I want to buy this stock before they report, because I think they're going to beat. And you can see when they beat back here. Let me move this little arrow. Whoops. Well, you can see it spiked up on the last earnings report. You can see it spiked up here on the last earnings and spiked up here. So they do tend to spike. Sometimes you can get as much as 10% out of it the next day or two, and then you sell that and you make a nice 10% profit in one day, which I will do, tomorrow if this stock is up 10% tomorrow. Joe, do you have any news from like Yahoo Finance on where they're trading? Okay.
I was just following you. I pulled up Google Finance here, and I noticed that Lam Research, it did beat expectations. It reported pretty positively, and right now I see it's up about a little over 4% after hours.
Awesome. Great. Okay, so I took a flyer here by using this tonight and making that point, but I was pretty confident that based on the history here that it was going to beat, and so I've just made 4% on my money. That's boy, I mean, that's everything you need to know, right in this chart, how to use Chaikin Analytics. Look at when they're reporting, do that kind of 5-year view, and if everything lines up like that, there's a pretty solid chance that it's going to go up higher. Great, Joe, thank you, appreciate that. Okay, so a stock price. Again, part of my learning was to understand that a stock price doesn't go straight up or straight down. This chart actually was created almost 100 years ago by a Dr. Wyckoff to show the way a stock price actually moves. And it's still relevant today. Nothing's changed in 95 years. So you can see it zigzags, and then it will bounce up and pull back and bounce up again, go sideways. So it's important to understand this, to understand when to get in and out of a stock. This is all part of your timing, because if you're buying a stock, you want to buy it on this, like what they call throwback or correction. And if you're selling a stock, you want to sell it when it's up here. And that's what that overbought, oversold indicator does for you. So let's look at another example. This is Axcelis. I think that's how you pronounce it. I highlighted the fact that they report May 4th. It's a great stock idea. I bought this stock yesterday as well because I got a money flow buy signal. This has been on my watch list just since Sunday, okay? And I'll show you how I know, how I knew to put it on my watch list. And then I got this money flow buy, and look at this money flow. I mean, this is like perfect. I love big chunks of money flow like that, because what will tend to happen is that price will really jump up. Look, this is like the last time everything lined up, and there was a chunk of money back in September, October, and look, that took a nice upward trend there. And I mean, look how significant it is when power gauge goes neutral and there's a little bit of money coming out, it drops. It's so predictive. It's pretty uncanny. So looking at this stock, what do we see? We see a strong power gauge rating, pretty strong, pretty much for the whole year. Strong relative strength relative to the S&P. It's been outperforming the S&P since August. And for the most part, there's been money pouring into this stock. It's natural to have a little bit of money coming out. It's nothing to panic about. It's kind of the natural rhythm of the stock. But these big chunks are awesome. And then now let's look at this overbought, oversold indicator here, because this really kind of measures that Wyckoff pattern of a stock. And it kind of measures the zigzagging. So When this is up here, it correlates to this peaking in price. This is when you want to sell it, not buy it. Likewise, when it's pulled back here by this 30, this is an ideal time to get into this stock, because let's just go back to the Wyckoff chart. It's referencing one of these throwbacks or corrections. So you want to buy on these pullbacks and sell on these spikes. And this measures that for you. So 30, if you're taking notes, 30 equal great time to buy, 70 and over is a great time to sell, take your profit. If I had owned this stock, I would have sold it up here, because it's up here at its high mark and the spike is way above the volatility band, and it was up here, it looks like about 19. I just bought it, so I wasn't in that situation. But another thing you can do is look at the news stories, which are on the same chart. And by linking to these news stories, you can see what the analysts are saying. So for this, I linked to this one into the article. I could see that the analysts were giving a consensus for this stock of 1875. It was at 1820. So the analysts are thinking this stock is going to go up. And because it was, this is called oversold, it was dipping down here, that just seemed like the ideal time to get into this stock, rather than wait closer to earnings and take my chances. So that's how I think. That's the kind of the thought process that I go through. Let's look at the 5-year view. How does this look to you? Look at this, earnings beating since middle of 2014. That's almost for 3 years they've been beating their estimate revisions, which is pretty cool. And I drilled down on the earnings component of the power gauge rating, which you can do from the chart. And you can see here that the earnings component overall is very bullish. The things that I like to look at, earnings surprises and earnings consistency, are also very bullish. So this passed my smell test to buy, based on everything I'm looking at on this chart. And that's pretty much how I think. That's really the the methodology I go through. Okay, so how do I find these stocks? Well, you probably say, well, Mark tells you what to buy, but that honestly, that's not true. But I do get some of my ideas from the Market Insights, which is the market commentary he puts out every Sunday night. And I know our subscribers, including me, read it religiously, because he really, since he's been writing this for the last 3 or 4 years, he's been dead on with what's happening in the market. And he's really allowed people to avoid a lot of pitfalls by advising them on how he sees the market playing out. He also gives specific stock ideas. And Excelis was one of his 2 bullish stock ideas of this week. And as I said, I put them on my watch list just on Sunday. And then I got that buy signal, and looking at the charts I've just showed you, I made the decision to buy it. So that's one way. That's a really easy way to get stock ideas, is just listen to Mark. I mean, after all, he's the expert. So, let's tap into his brilliance. The other thing I know what to buy is by going into strong industry groups. And strong industry, why do you want to go with strong industry groups? Well, the research shows that 50% of a price is attributed to the industry group, and that by buying even an average stock in a strong industry group, you are likely to outperform even the strongest stock in a weak industry. So put everything in your favor when you're buying a stock. Put all the chips in your favor. Now, what we do is we rank these 64 industry groups, which are pretty much the industry standard as defined by Zacks. And every stock is grouped into one of these, and Zacks does the grouping. So we, though, rank them differently than Zacks, because we rank them based on the proportion of power gauge stocks, strong power gauge stocks in any one industry group. So, for instance, the banks, for instance, utilities now are strong, construction is strong, miscellaneous technology is strong, utilities are strong. These have a preponderance of higher proportion of bullish rated stocks to bearish rated stocks. And you can go in to any one of these industry groups and drill down on, for instance, the 3 bullish stocks that are in here, or the 33 that are in utility. But that's a lot of research to go through 33 stock charts looking for a stock that meets your criteria. So what I do is I use the screener. And the screener comes bundled into the workstation. It's been an enormous time saver. And I can save criteria and then just click on that criteria, that list of criteria, and it'll automatically populate it like it's done here on any given day where I pull it up. So I ran this yesterday. My criteria is slightly different during earnings season. Remember those blue factors I pointed out early on when we were talking about the power gauge rating, earnings surprise and earning consistency? I put those in here. I want those to be strong now because it's earnings season. And I started with a stock universe of the strongest industry groups. Now, by doing that, the screener will only take stocks that are in the top 20% of industry groups. That's fine. Those are the strongest groups. If I'm going to be buying a stock, I want to be in the best of the best. So that immediately takes my universe of 5,000 stocks down to 516. Then I obviously want a power gauge rating that's bullish. That now I'm down to 189. And then you can see as I put these different criteria in how the numbers dwindle. Strong money flow, strong relative strength. That's part of our classic bull pattern. And I'm going with mid and large cap stocks now because they are outperforming the small cap stocks. So I start with a universe of 5,000 stocks, and literally in seconds I come up with 3, and you can see there's a buy signal on 2 of them. So let's look at those 2. Here we've got American Electric Power. So I already know that it's going to be strong in those earnings criteria that I want, earnings surprises and consistency, because it wouldn't have made it into the screen if it hadn't. So a lot of the research is already done for me. I'm showing you that it's triggered as well, this relative strength breakout buy. So that's a good sign as well. Would I buy this right now? Not really. It's reporting April 27th. I put this on my watch list. I want to see stronger money flow, and I want to see relative strength a little bit stronger. So I want to see a little bit more persistency of those criteria before it passes my smell test. And the second one that had that buy signal was UGI Corporation. Again, this is another utility stock. And here's the earnings breakdown. As you can see, surprises and consistency are very bullish. This reports May 1st. And you can see it has an oversold buy on it today. I might be more likely to buy this stock today because you can see here it's dipping down, it's oversold. That's why it triggered this signal. There's a lot of money flow coming in, and the relative strength looks pretty persistent, and it's been consistently green power gauge since February. So this stock is looking very good to me as well. I'll keep this on my list. I'll certainly look at it every day until May 1st, and depends on if I've got money from selling another stock or not. I could be buying it. So we get these testimonials really frequently, almost every day. But this one, I think, really sums it up for so many of us, that there's not enough time in the day to do the work Chaikin puts before me in minutes. And she wrote this before the screener was added to the workstation. So the screener now is it's like my lifesaver. I really rely on it, and really depend on buying stocks that pass that criteria. And that's how I research for stocks. All right, so a lot of you said when to buy and when to sell is a big challenge, and I totally get that, because I think that is the hardest part of being an individual investor. When do you, particularly when you sell? I like to shop, so I like buying, but selling is a little bit more difficult. But I've created a pattern for myself of rules, and when those criteria are met, then I sell, and that has really taken the stress and the subjectivity out of knowing when to sell. The alerts, the signals help me tremendously, and I didn't quite explain this, but we do have these 6 sets of buy and sell decisions, and they trigger with these little triangles that you see here when certain criteria are met. And these are really great helpers of helping you with timing. So I run the signal. This is part of my daily, routine, how I spend 10 or 15 minutes a day monitoring my portfolio. I've gone into my watch list, as you can see here. I've overlaid this little bell, which is the alerts view, which includes the buy-sell signals. It includes if there's a power gauge rating change on any of my stocks, if there's an analyst estimate revision. So it gives me really the important things I need to know about stocks I'm watching that may affect the price of that stock. And I can get these every day just by in the morning, and after the close, I go into this little bell, overlay it, and here's what I got yesterday, which were these buy signals on these 2 stocks that I also found on the screener. So you can see they kind of overlap each other. There's kind of, it all kind of comes together. And I'm showing you these various screens because there's more ways to get at a decision point than one. But this is one great way to get to a decision point, is do this overlay on your watch list every day. I also do it on my stock list as well. So that's how I know really when to buy. Now, when to sell. And because I spent so much time on those other examples of showing you my methodology, my thought process of when to buy, I didn't think I needed to spend more time on that. But I wanted to get right into when to sell, because I really do think the selling is the hardest part. So there's a couple of criteria. There's 2 scenarios. Either you're taking a profit, which I'm doing here, or a stock is breaking down. So let's focus right now on when to take a profit. When I take a profit is when the price hits that upper volatility band, which is that kind of channel marker up at the top, and we'll walk through it on a couple of examples. The price is overbought. That means it's zigzagging up. So you want to sell it on that upswing, not on the downswing. Or the price spikes after a strong earnings report, like it's likely to do tomorrow for Lam Research. Okay, so this is a stock. I mean, let's break this one down, because this is really a perfect example of how I got in and how I got out. This stock, I took a profit of 17%. Since it's broken down, since I sold it, it's down 36%. That's a pretty staggering change, wouldn't you say? I mean, how would you like to have still owned this this stock to watch it go down here? So how did I know to get out up here at the top? Well, first let's look at when I got in. Okay, I bought this in December. I had this on my watch list. It had been on a screener. Insurance is a strong industry group. And so I got in here where everything lined up. You look at all this wonderful green lining up, and it's dipping down, right? So I picked it up right about in here. I bought it at 16. And then, as you can see, it trended up, and then it spiked up really nicely in February. And I sold it up here at almost 19 when it hit this upper volatility band. So I pointed these volatility bands out earlier. These are kind of like channel markers. I'm a sailor, so I'm very aware of honoring the rules of the sea, staying within the channel, because otherwise you're apt to run aground. So I think of that when I look at these volatility bands, and I like to stay within. So if it spikes up and hits those, it's saying, boy, this is a good, really high for this stock. It's a good time to take your profit. What also was happening, look down here at money flow, and you can see money flow was starting to ebb. That was the signal that things were starting to go south. And since I had a little bit of money flow coming out, the power gauge was still green, relative strength was still strong, but there was a little bit of money coming out of there, and it was up at this upper volatility band. I said, boy, I'm going to take my profit and get out. And I am so glad that I did, because this stock is now at 12, and I sold it at 19. Took a really nice 17% profit. 2 days later, look what happened. They pre-reported earnings, really odd, but they pre-reported 10 days early, and the spike dropped 10%. And I was saved from all of that because I followed this rule. That's how powerful these rules can be. Do they work all the time? Not all the time, but I'd say 70 to 80% of the time they work, and that's good enough for me. Let's look at another example. Progressive insurance stock. Again, this is a really strong stock. I bought this back in February at this with this buy signal. Had seen it, gotten it on a screener. I think Mark also featured it as the stock of the week. So it was on my watch list. I got this money flow buy signal here mid-February, and I bought it at 37. And then it had a really nice run up. Again, hit this upper volatility band. And also look what's happening down here. I circled this because you could see that the money was starting to be on this downward trend at the time that it hit this upper volatility band. So again, I'm saying, money flow looks like it's starting to dwindle. I've got a really nice profit on this stock. In 4-week time frame, I took my profit. Now today they reported, and they disappointed. And this stock was down a little bit more than 1 1/3% at the close. I think it was down 1.5%, but it'll likely go down more tomorrow because it missed the earnings report. So these rules have really kept me with a nice profit, as well as kept me out of trouble and got me out before it starts going further down. Lamb Research, let's look at this again because I showed this in the beginning as a classic bull. Now, I froze this chart going back from a webinar I gave on March 28th because that's the day I sold it. And I sold it up here because it too hit its upper volatility band. It had really strong money flow. It had this kind of like a double high. So I thought, boy, that's not likely to last. Usually they dip a lot more, and this was just bumping up and up into its volatility band. So I thought this is a really fortunate time to get out, even though everything else was telling me it was strong. This one day, which you can drop down on any stock chart, was telling me this was at a 52-week high. So I said, let me just get out of this stock while it's good, which I did. But then, as I told you, I got back into the stock tomorrow at a lower price than what I sold it for because they reported tonight after the close, and they'll likely be up more than the 4% in the after hours market than they already are by tomorrow's open. So that's really the key of following those rules. Now, Anil, who I know is on tonight because he's concerned about the president, I don't blame you, Anil, but don't let the president affect your investments. You can do it without him by following these rules, which I know you do. So you've followed these sell rules and sold, yeah, me initially for a 23% profit in 3 weeks, and then by following those rules, I know you've given me these success stories of other stocks that you've made nice percentages on, anywhere from 15 to 22%. So that's very cool. I always like to give Anil a shout out because he does follow the rules and it's served him well, right? Neil, if there's any other examples you have to share, just chat them in. Maybe Joe can call them out. All right, so the other time to sell is when you see a stock is breaking down. And these are my rules for when a stock is breaking down. When the power gauge turns neutral, remember the power gauge rolls up 20 factors. So even though it's showing up as one unit on the chart, it's really a roll up of 20. So it has an enormous weight to it when looking at a stock. So when it turns neutral and something else, particularly money flow, turns negative, that's a really strong signal to say, hey, you better think about getting out of this stock. Certainly if you get a sell signal, that obviously is a really good time too. And if the price drops below that orange line, which is that moving average kind of long-term trend line, that's a good time to look at it getting out, as well as underneath that lower volatility band. I mean, I've taken the profit when it goes up. Likewise, when it drops down into here is a good time to take that stock off the table as well. So quad graphics is a good example for a number of reasons. First of all, this is one of the biggest winners of all stocks. It's a small cap stock, but it outperformed pretty much every stock in 2016. It was up 189%, and I got into this stock earlier on. But just because it did so well then doesn't mean it's going to do well now, and that's a really strong lesson to understand, that past performance is no guarantee of how the stock is going to perform now. And year to date it's down 11%. So there you go. That's the proof. Buy and hold just does not work anymore. But I bought this stock back here on a screener. I got a buy signal on that aftermath of the Brexit vote on June 24th. A lot of stocks dropped by 5 or more percent. I had a lot of cash on hand, so I went on a buying spree and I bought about 4 or 5 stocks, one of which was Quad Graphics. And then it took a nice rise up here, up here, up here. But you can see what's happened now. Late October, power gauge turned neutral, money flow turned negative. I should have sold this stock back earlier. Probably up here would have been a much better time when that was going on. But it was around the election. There was a lot of uncertainty, both up and down, and I wasn't quite sure what was going on. So I unfortunately should have sold it. I didn't. But then right before the election, when it started to rise again and it went up over this orange, proprietary long-term trend line, I thought, well, now that's just a good time to sell, particularly since money flow was negative and power gauge had turned neutral. So you can see that this stock since then has broken down, relative strength turned negative, and there tended to be persistency in money coming out of this stock. And then you can see here around February, and again very recently, you get sell signals. So if you still own this stock, or we're trading options, this is kind of the flip side of how you can make money as well, by trading options on these bearish stocks. So I haven't gone into the bearish stocks because they really are the flip side of the bullish. And I think once you master this, it's pretty easy to just correlate the opposite to the bearish scenarios and know what to avoid. I wanted to spend really our hour on how to find these winners and boost your profit. So I made you a promise that I would show you how to boost your profits. And by following these 3 simple steps, tools you trust being the power gauge rating, knowing what to buy, which is that classic bull in a strong industry group pattern that you can find on the screener, and knowing when to buy and sell, which you can use by looking at those charts, the overbought, oversold indicator, as well as those sell signals that can really help guide you with timing. So I've made you a promise that you would find winning stocks so that you could boost your profits and be confident versus fearful investors. So I challenge each one of you to take these simple steps and try them yourself. I think you'll be surprised at how simple it is and at how pleasantly surprised you'll be with the results. But start thinking about where you want to spend some of those profits you're going to be making. Put a goal in, because then it makes it really fun. I mean, I took something that I was truly fearful of, the stock market, and I'm really having fun with it. It's a pleasure for me to look at my stocks every morning, to go through and kind of, see what's going on with those alerts views and make those buy sell decisions. I've made it really fun. And part of that too is to keep my eye on the end game, which are stashing some of this money away for retirement, but also taking some really nice trips. Mark and I now are talking about going to London and Wales in the fall. We have a really good friend who's building a house in Wales. So Sharon, you're probably listening. I hope your house is ready by October, because we'd love to come visit you in October. But that's kind of the goal we've got in mind. So think about where you want to spend, some of these profits. And I say this is appropriate for everyone from novice to knowledgeable. Steve here is a good friend of ours. He has the daughter who got married in Istanbul a couple of years ago, which is why we went there for the wedding. But he's a novice investor, and he says, the genius of Mark to create a functional system and the brilliance of Sandy to learn the stuff and present it with such frankness, simplicity, and genuine caring. I think I can learn this amazing thing too. So that's the key message here, that this is not rocket science. This is doable. And then we have everyone from novice to knowledgeable being John Malden, highly respectable name in the industry, and he's impressed by what Mark has done. And his stock analysts use it as part of their due diligence when they're writing about stocks and researching stock ideas. They check Chaikin Analytics religiously. We just had a phone conversation with him the other day. So think about how you can use this to make these profits and boost your portfolio performance. This is all powered by the Chaikin Analytics. We call it the Financial Freedom Fast Track because it gives you financial freedom. And these are some of the additions that have been built into Chaikin with no additional cost to the subscription, but we're going to offer you a special price, so hang on. The screener, as you can see on the far left, the options overlay, which we haven't gotten into, but Joe gives options webinars on how to use that for those of you who trade options or want to trade options. He gives presentations every week on that. The earnings overlay, I've shown you how I use the earnings to flag stocks and take advantage of that volatility around earnings. And there's this new discovery engine that we have in here, which is a very simple way to be like a Netflix for stocks, or the way Pandora is for Spotify is for music. You can seed this with a stock. I seeded it with Lamb Research, and then it shows you the criteria that it is using to find other stocks like that. And you can see Entergis, which is one of the Mark's, stock of the weeks in his market insights. So as I say, there's multiple ways to kind of confirm your decisions, but it's all right here in one place. So I said we would be offering you a special price. The subscription for a year is usually $1,950, but we're taking $200 off. But you also will get a little bit sweeter deal. So stay with me, please. These are additional features that are all built into the platform, or what you get with the platform. And I point out Mark's Market Insights. This is how I got that idea to buy Axelis yesterday. I highlight the coaching calls in red because I think these are just amazing. Joe and his team in customer success are totally dedicated to your success. That's their job, is to make sure you're successful. So they give new subscribers what we call quick start coaching calls to show you how to, as early as tomorrow, you'll get into a coaching class where you'll learn how to set up your own watch list, how to overlay those alerts views, how to overlay the signals, how to use the screener. It's all these critical issues you need to know, features, rather, how to use the platform. And then if you need additional help or want to integrate it into your own methodology and need a little more personalized attention, they'll schedule a one-on-one session with you. I don't know any other financial service provider that does that, but as I say, we are totally dedicated to your success. So screener, earnings, sector performance, these are, some of these things we had no time to get into today, but when you subscribe, you will be walked through these various features to know how to use them so that you can take full advantage of the platform. But we're taking this additional $100 off when you subscribe by midnight tonight. So call this phone number, send us an email, or go directly to CHAIKINAnalytics.com/Sandy to order directly. But you want to get in on that session tomorrow. Take advantage of earnings season because we've just started. We've got a few more weeks of earnings season. Get in on these opportunities and boost your profit. So, Joe, I'm going to turn it over to you to close up the session. But I thank you all for staying. It's been, I hope it's been as great for you as much fun as it's been for me.
Awesome. Well, thank you so much, Sandy. I want to go ahead and emphasize, everybody, if you go to CHAIKINAnalytics.com, actually, I typed in the wrong, mistakenly, I typed in the wrong code, but /Sandy, that will take you to our order page. So again, CHAIKINAnalytics.com /Sandy, or you can reach us 877-697-6783. You can get in touch with a member of our support team. But again, if you go to CHAIKINAnalytics.com /Sandy, you'll have the discount code automatically applied. We are here for a few more sessions this week. Doing a Tuesday webinar is always great because anybody who's new to the program can get right into Chaikin Analytics. Pretty quick and easy to get in touch with us. We have tomorrow our onboard session, and then of course on Thursday we'll be hosting our pre-market analysis webinar, which is great, a wonderful walkthrough of the market, set some expectations, but then of course we also have the ability to get a sense for the options analysis webinars, which again is just for our own subscribers. So with that in mind, again, CHAIKINAnalytics.com /Sandy, 877-978-6257. Want to thank you all for joining us. Keep an eye out for the recording to be sent out tomorrow morning. In the meantime, have a great afternoon, and we will chat later. Thanks.